Life Smarts.
No matter how hard you work and how much you save, borrowing money is a normal part of adult life. We borrow money to buy a car. We borrow money to buy a house. When we use a credit card, we're borrowing money. Having good credit makes it possible to get approved for these loans at the lowest interest rate possible, saving you money.
Life Smarts. Learn it, live it. Sponsored by Cyber Scout. Here's America's consumer expert and the national quizmaster for Life Smarts, consumer man Herb Weisbaum.
When you apply for credit, a potential lender checks your credit score. Credit scores are 3-digit numbers based on your credit history. It tells that lender how well you've used credit in the past. Let's talk about credit scores with Liz Weston, a personal finance expert at NerdWallet and author of the book, Your Credit Score.
A credit score is basically a 3-digit number, and companies use it to see how likely you are to pay your bills on time. That's basically all it is. Credit scores are generated by the information that's kept on you in what's known as a credit report. There are 3 major credit bureaus, and they collect all this information about how you've paid your bills in the past, and the numbers are calculated from that information. The most important thing is your payment history. Again, have you paid your bills on time? Have you paid previous credit accounts on time? That's really, really important. Another big chunk of it is what's called credit utilization. Credit utilization is a really big part of your credit scores. It's the ratio of how much credit you have and how much of that credit you're using. You get that number by dividing your total debt by your total available credit. And you want to keep that percentage as low as possible. Let me give you an example. If you have a credit card, you're going to have a credit limit. That's how much you can charge. It might be $1,000, for example. If you run up a big balance, if you run up like a $999 balance, that's really, really bad for your credit scores. You want to keep it more to $300 or less. You want to keep a big gap between the amount of credit you're using and the amount of credit you have. It's important to have a good credit score for so many reasons. When you are ready to get your first car, for example, you're probably going to need a car loan, and your credit score will help determine how much interest you'll pay, basically how big your car payments are going to be. Then when you go to get car insurance, again, your credit score comes into play. It's going to determine what your premiums are, how much you pay for car insurance. When you're ready to get your first apartment, your landlord is probably going to check your credit score to see how likely you are to pay your rent. Then there are cell phone companies. They determine whether you get service and then what kind of promotions you are offered based on your credit score. So it's all the way through your financial life. Credit scores are really important. It's a huge myth that you have to be in debt to have good credit scores. You don't ever have to pay a dime in interest to have really, really good scores. So when you get your first credit card, make sure you get in the habit of paying it off in full every month. That's one of the best habits you can have for your credit and for your wallet. It's really surprising, but one skipped payment can knock 100 points off your score, can move you from the good score range to the mediocre score range basically overnight. And that effect can linger up to 3 years. That's why it's so important to pay your bills on time, particularly your credit accounts.
A few more facts about credit scores. Most people think they have just one credit score. Actually, you have a whole bunch of them. That's because different lenders use different equations for calculating credit scores. An auto dealer may use a different scoring model from a cell phone company. The FICO score and the Vantage score are the most commonly used scoring systems. They're slightly different, but both use a scale from 300, very poor, to 850, excellent. Your credit scores can change over time based on your credit history, including late payments, amount of available debt, and whether you applied for a lot of credit cards recently. Credit scores are not stored as part of your credit history. Your credit score is calculated only when it's requested. By the way, checking your own credit score cannot hurt it. Well, that's it for now. I hope you'll share this video with your friends. Remember, you can find me, Herb Weisbaum, online anytime on my website, consumerman.com.
Life Smarts, a service of the National Consumers League, sponsored by Cyber Scout. Join the competition and use the free study resources on lifesmarts.org. Life Smarts. Learn it, live it.
Life Smarts.